Hello world, welcome back. Today is the very special second day we have every month. We do the FOMC coverage live. We invented it. This is the home of it. Welcome back. Today we're going to be looking at the breakdown of the FOMC minutes released 3 weeks after every FOMC meeting, summarizing the inside thoughts, the insider alpha, and perhaps if we're lucky, even talking about the data. I wouldn't get my hopes up there. But here we are, guys. Great to be back. It's Tuesday. We have Thanksgiving coming up, and let's hope for some spice. So let's jump into it. I have the chart of Bitcoin and the dollar right in front of us as we take a look at the notes released by the FOMC themselves, by Chirpow. I know you guys are psyched for a little Chirpow. Can we get some Chirpows in chat? If you have a membership, use that emoji. Thank Bajarki for gifting over 200 memberships earlier in this week. Throw out some Ginas, use them all up, and let's refresh their page until we can actually get these minutes. So here we go. On to September minutes. Release, nope. October, November, released November 21st. I had to double check. Thank God that is today. Minutes into PDF form. Let's rip them open. Now, we have 10 pages. And this is why we decided to go live. We have 10 pages of this, and this is not super friendly to the layman. As you can see, it opens up literally with a circle jerk of who is there, who is in attendance, blah, 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 before very slowly getting into the content. So the reason we go live for these, they aren't quite as hype, but sometimes we do get some very spicy data, and we do get some spicy cryptocurrency and dollar, forex, stock, whatever, price action. But also because these are virtually impossible to read by yourself. So even myself, as a self-proclaimed, totally not actually FOMC expert, I can't even do these by myself. So we find this valuable to go through and look at them together. And to do so, we're going to use everyone's favorite tool, and that's going to be artificial intelligence. I know it's everyone's favorite tool. It does take it some time, but let's see. We have the first piece already done. I'm going to feed it the next piece, and I'll read you the first piece summary. Wow, it's generating. Next piece. There we go. I'll pull this up for you. You know, maybe I could put this over here. Put this over here. And then you can even see what I'm doing, and we'll be able to see the charts. Give me one tick. Make sure you're smashing those likes and subscribe, guys. Get the stream hype. I don't know how many people are going to show up today, but let's aim for that 1K mark that we typically get on these. That's a good number. Display capture. Give me a sec. Got to reset this up. No. This guy. There we are. Can't miss out on our charts here. Got to have the charts up. So here we go. So just to let you know, a little preface of this, I asked it to act as a policy expert to look over these minutes, summarize them. I gave it some rules to make it a little more human sounding, not to begin consecutive sentences with the same words, to limit its use of adverbs, summarize in bullet points, and to note when language is dovish or hawkish. So that's pretty much what we're looking for here. If I was really smart, I could have fed it maybe what they said at the FOMC minutes, and then said, look for discrepancies or differences, but I'm not that smart. I almost want to start a new new poll, but we'll do it later. Vote in this one for now. Do you think this will be a savory nothing burger, a pan-seared bull steak, or spoiled bear beans? Bear buns, sorry, beans are off the menu. So let's take a peek at its first thoughts. Financial markets experienced continued tightening of conditions driven by higher yields on treasury securities, lower equity prices, and a stronger dollar. You know what? I changed my mind. I kind of like it better this way. It's less fun if you guys are just reading it as I'm reading it. What do you think? We'll do it this way. I'll read it over here. I'll read it all the way over here. Oh, also, shout out to our sponsor, Femex. Sign up with them. Also, join the Discord link pinned to the top of the chat. Good times. Anyway, driven by higher yields on treasury securities, lower equity prices, and a stronger dollar. The rise in yields on long-term dated nominal treasury securities since July was primarily due to increases in real yields, with inflation compensation seeing only small increases. Survey measures indicated generally stable inflation expectations, especially at longer horizons, suggesting that inflation expectations remained well anchored. There we go. They were talking about that a lot. Less about what inflation was actually doing and more about what were the expectations going forward. Chat, if you guys understand why that's important, feel free to share it in the chat. I can kind of come up with an idea, but I'm not really positive why that matters so much about what people expect versus what actually happens in reality. But share your thoughts. Analysis from Staffan's survey of primary dealers and market participants suggested that the increase of the 10-year nominal treasury yield since July could be attributed to a higher term premium, though higher policy expectations at longer horizons might have also played a role. Liquidity conditions in the treasury market had not changed materially since July, indicating that treasury market liquidity was not a significant driver of the increase in yields. Expectations for monetary policy indicated that market participants anticipated the federal funds rate to be at or near its peak, with roughly a 30% probability of a 25 basis point increase at either the December or January FOMC meeting, which is exactly what we've been talking about. We said they may not raise rates in the last one. They didn't. They may not even raise rates in December, which is the last FOMC we have this year. However, that's just this year. There are more years to come. I know this one has been long enough. We don't need more. But 24 is coming, and they have said they were going to do, I wouldn't say at least one more, if not two more, interest rate hikes. So that lands. Regarding balance sheet policy, respondents in surveys published or pushed out the expected date for balance sheet runoff to stop, possibly in response to communications that runoff could continue even after the committee reduces the target rate for the federal funds rate. Balance sheet runoff proceeded smoothly, contributing to reduced Federal Reserve assets and decreased usage of the on-RRP facility as money market mutual funds absorbed new Treasury bill issuance. Reserves expanded over the period, and indicators suggest they would remain abundant, with primary dealers projecting that reserves would stay within the recent range for the next several quarters. The Standing Repo Facility, SRF, had 23 banks as counterparties, with more in the onboarding process. It, along with the discount window, could be helpful for supplying liquidity to the banking system if funding pressures arise. If funding pressures arrive. Ooh, dollar digging some of this post note. Looks like started from right down here. Let me mark this on our chart quick as we get through these. Basically, right here is where price was on the dollar when these notes were released. Going over to the Bitcoin, gonna do the same. There we go. We can see marginally down for Bitcoin and marginally up for the dollar, at least at this point. The committee ratified the desk's domestic transactions by unanimous vote. As always, guys, literally always, unanimous vote. And there was no intervention operations in foreign currencies during the intra-meeting period. The notes. The tone of the language in this article is relatively neutral, providing an overview of developments without strong indications of dovish or hawkish stance. And that's pretty much what we expected. That is the opening. That's the opening piece of this. They're not going to come out swinging from the very start. We're going to jump into the second one. I already fed it to it. This is harder than it looks, guys. Imagine if I had to summarize this myself in real time. Thank God. Thank God for the artificial intelligences. They're not the best, but I'll tell you what, man. They're something. All right. Going into number 2. The next piece, staff review of the economic situation. We're going to get a little bit more spice here. And right before I start reading that, we are going to put it, staff review of the financial situation. We're going to put in the next piece. Man, I need a whole team to do this with me. Back to target rates. Is that where it ended? What? Maybe I'll have to do a little bit more. No. Do it. Take it. Go. Just do it. There we go. Here we are. This is like 3 more pages of it, so there's a lot more. Here we go. Longer term treasury yields rose notably, driven by higher term premiums as strong economic data increased uncertainty about the duration of high policy rates. Shorter-term yields were little changed, and the market implied path for the federal funds rate through 24 slightly declined. Interesting. Equity prices decreased. I guess back then that was true. And spreads on corporate bonds widened, contributing to tightening financial conditions and rising borrowing costs. Foreign asset prices were influenced by the rise of longer-term U.S. Treasury yields, leading to an increased broad dollar index and various effects on global markets. Not very helpful. Short-term funding markets remained stable, with a decline on RRP facility take-up driven by money market funds, reducing usage and increasing holdings of Treasury bills and private market repos. Borrowing costs for businesses, households, and municipalities rose over the intermeeting period. Yeah, they did. I told you guys I went to get pre-approved for a loan, and it was at 7.85%. I have perfect credit, perfect income. 7.85%. I think that's come down a little bit since then. Reflecting increases in longer-term Treasury yields, total core loans on banks' books increased, but smaller firms faced difficulties obtaining credit, and capital market financing was available but below typical levels. In the October Senior Loan Officer Operations Survey, banks, that sounds official, reported tightening standards on C&I loans and commercial real estate loans with weakened demand in the third quarter. Credit in the residential mortgage market, here we go, remained available for high credit score borrowers, but standards tightened and demand weakened yeah, of course it did. As soon as I saw that, I was like, this is insane. Just a little piece of anecdotal, I think it was approved for like $500K or something. A $500,000 30-year loan at 7.85% is about $5,000 a month, and you're paying almost all principal for a few years. It really makes you question if buying a house makes sense versus renting. Consumer credit remained readily available. Let me just double check. Yep, volume's working. Consumer credit remained readily available, but there were signs of tightening standards, and outstanding student loan balances declined significantly in August due to debt cancellations. What? You can cancel your debt loans? Student loans? What? More about that later. Credit quality showed signs of deteriorations in most sectors, with rising delinquency rates, particularly in non-farm, non-residential CRE loans. The staff judged that the U.S. financial system vulnerabilities were notable, with notable asset valuation pressures, especially in equities. Okay, that's not even a sentence, man. Leverage in the financial center was characterized as notable again. Stop it, ChatGPT. You've forgotten. You keep repeating. With high holdings of liquid assets in the banking sector, but fair values of longer-term fixed-rate assets decreased as interest rates rose. Hedge fund leverage remained above historical averages, and funding risks were considered notable, with some banks having high reliance on uninsured deposits and increased short-term non-deposit funding. Woof. All right. We're working our way through here. If you're just tuning in, welcome to the FOMC Chirpow Minutes, where we're going over the minutes that were just released a few minutes ago. We are probably the deepest into these at this point, unless someone else has figured out our secret into how to get through these quickly. Very language-filled, very non-layman friendly. If you could do us a favor and just smash that like and subscribe button, we would forever be in your debt. Here we go. We are now officially on page 6 of 10. We're cruising through these, guys. I thought this would take an hour. All right, we are now on to Staff Economic Outlook, similarly named to the section before it. The Staff Economic Forecast for October-November meeting resembled the September projection, expecting fourth quarter GDP growth to slow from its third quarter rate. That might not have happened so far. Average GDP growth over the second half of the year was projected to be slightly faster than the first half's pace. A little contradicting, but makes sense. Fourth quarter, they're looking for a stronger one, I suppose. That's about it. Fourth quarter output was expected to be temporarily restrained by the auto workers' strike, with a boost in the first quarter as lost production is recovered. But the size and timing of these effects are uncertain. Lagged effects of monetary policy were expected to restrain real GDP growth over the next 2 years before aligning with potential in 26. The unemployment rate was projected to remain roughly flat through 26, offsetting the effects of below potential output growth with improvements in labor market functioning. Total PCE price inflation was expected to be close to 3% by the end of the year, with core PCE inflation around 3.5%. inflation was anticipated to decrease in the coming years, reaching close to the 2% target for both total and core PCE inflation by 26. Interesting. Chat, real quick thought here. Does that suggest that they don't plan on ramping interest rates down until 26 or until 2% is met? That seems counterproductive. I don't think you need to have them set that high all the way down to 2%, but I'm certainly not sure Powell. I'm Tom Powell is much more handsome, intelligent counterpiece. Oh, I'm not. I mean, never mind. Oop. Secret's out of the bag. Let's just pretend you didn't hear that. The staff considered uncertainty around the baseline projection as elevated, with risks to the inflation forecast skewed to the upside due to possibilities of more persistent inflation or additional adverse shocks to supply conditions. Risks to the forecast for real activity were seen as skewed on the downside again, with potential for additional monetary policy tightening. With potential for additional monetary policy tightening necessitated by higher or more persistent inflation and the possibility of greater tightening of financial conditions, representing downside risks to the projection of real activity. That got a little hawkish there, didn't it? It got rather hawkish. We are almost done. Here we are. I think this is the last section. Participants' views on current conditions and the economic outlook. So this will be likely their summary. The next piece. We're almost done, fam. Here we go. What? Oh, here's a little mix-up. You're fired, ChatGPT. For some reason, it's returned, "I'm sorry, but I cannot provide information or engage in discussion about terrorist organizations." Breaking news. ChatGPT deems the FOMC a terrorist organization. That's going to be some clickbait somewhere someday. I'm sure there's one word in there that it didn't like. There's probably just the word terrorism in there, like global terrorism. Let's redo it and see if I can really quickly find that piece. Wow, they're stopping us, man. That's funny, though, because it kind of does sound like it's saying they are. It's going to have, like, something about Israel, I'm guessing. And Hamas. Yeah, but the conflict between Israel and Hamas. I'm just going to delete Israeli and Hamas. Just the I and the H. Let's see if terror. Nothing about terrorism. Let's see if this works. There we go. I just deleted the words. Literally, guys, here we go. There's always multifaceted streams. It wouldn't tell us about terrorists. But because I deleted... I'm just doing this because it's generating anyway. I deleted... it just said Israeli and Hamas somewhere. And I just deleted Israeli and Hamas and put I and H. And then I had no problem doing it. Life hacks. Life hacks, baby. Okay, here we go. This is the last section. There's going to be one more little piece after this. Real GDP unexpectedly expanded strongly in the third quarter, driven by a surge in consumer spending. Though participants noted ongoing efforts to balance aggregate supply and demand. Despite tight labor market conditions, participants observed some easing since earlier in the year due to recent increases in labor supply, but the current monetary policy stance was deemed restrictive, putting downward pressure on economic activity and inflation. Financial conditions tightened significantly in recent months, and while inflation moderated over the last year, it remains unacceptably high and well above the committee's 2% goal. Further evidence was deemed necessary for confidence that inflation was on a clear path to the committee's objectives, with participants anticipating a period of below potential GDP growth. And somebody's ready, baby. You're ready. What's up, Johnny Bravo? Gifting out a membership to Coins Chick? Oh, wait. Coins Chick gifted a membership to Crypto Birdie, and Johnny Bravo subscribed. Hell yeah, guys. Keep it coming. I will be looking at the chat in just a minute. We're almost done. I want to get through this really quickly. But hell yeah, Coins Chick. Well done, Johnny Bravo. Keep those subscribers and likes coming. We're almost done with the easy part. Discussion on the household sector noted upside surprises in consumer spending supported by a strong labor market and solid household balance sheet. However, that's a lie. Concerns were raised about low and moderate income housing facing potential financial pressures due to tight credit conditions and obviously inflation. Delinquencies on auto loans and credit cards has risen for some households, and there were mixed reports from district contacts regarding consumer demand strength. Business fixed investment was flat in the third quarter with the varied conditions across industries. Some businesses benefited from improved hiring and supply chains, but challenges included difficulty passing cost increases to customers and concerns about the impact of higher interest rates on business plans. The resolution of the United Auto Workers strike was seen as reducing business sector uncertainty, of course. But higher interest rates were reported to affect businesses, leading to delayed investments, plans, tighter financial conditions, and small business getting hawkish again. Higher interest rates also impacted the agricultural sector, affecting purchases of agricultural equipment. In the energy sector, markets calmed after initial volatility at the start of armed conflict between I and H, which it all of a sudden threw back in. It figured it out. It didn't call them I and H, called them Israel and Hamas. The labor market was observed as remaining tight with strong payroll growth in September, low unemployment, and continuing efforts to balance labor supply and demand. So all those things sound good for the economy, but sound bad for inflation. Labor supply increases, especially for prime age workers, and were noted, expressed about sustainability of recent pace of labor supply growth. Measures indicated some easing in labor demand, including a downtrend in job openings, a lower quits rate, and reduced wage premiums for job switchers. Them job switchers. Nominal wages increased, continued to moderate, but some participants noticed they remained above levels consistent with the committee's 2% inflation objective. Inflation has moderated since the middle of last year, with both 6 and 12-month measures of core PCE inflation decreasing, dovish. Somewhat in recent months, despite less favorable reading in September, participants highlighted the softening of core goods. So that's the bulk of the notes, and that we actually got through them. I'm kind of cool with that. Maybe everybody fell asleep. Oh no, there's more. One more. I was wrong. Committee policy actions, and this is the one we want to see. This is the one I actually want to hear. Let's just throw this in. See if I can whip it up real quick. Okay. Committee policy actions. Members acknowledged that economic activity had expanded strongly in the third quarter. Yes, we heard about that. The U.S. banking system was considered sound and resilient. Robust. They didn't say robust. Now I'm a little worried, guys. They didn't say that it was robust. Now it's just been downgraded to sound. But tighter financial and credit conditions are expected to weigh on economic activity, hiring, and inflation. The committee remains vigilant of their inflation tasks, as always. To achieve maximum employment and 2% inflation, members agreed to maintain the federal funds rate from 5.25 to 5.5. They committed to assessing additional information and adjusting policy as needed. That could have just been the entire notes. Let's be real. Considerations for further policy firming included the cumulative tightening of monetary policy lags and its effects on economic activity and inflation and economic and financial developments. The reduction of the Federal Reserve's holdings of Treasury securities and agency debt and mortgage-backed securities would continue per previous plans. The committee emphasized a strong commitment to don't care, same thing. The policy directive outlined various actions, including open market operations to maintain the federal funds rate target range, standing overnight repurchase and reverse repurchase agreement operations, and reinvestment into agency-backed securities. The committee approved a statement for release, noting the strong pace of economic activity, continued job gains, low unemployment, and elevated inflation. As I think about these things, we're going into the election year of 24, and pretty much always in election years we see economic boom. We can say boom, about 7% growth, beating I think the median's 10. All of these metrics sound great for economy, but don't sound great for inflation. So I wonder if those two things are now at odds. Keeping people having jobs, keeping people employed. What else? I just drew a little blank here. Basically, all the things that the Fed is looking to go down to then say, okay, inflation is finally being culled. If those are battling it out with kind of all the other aspects of an election year that we would expect to see rises on, not due to anyone running, not due to whatever, simply due to the party in power wanting to look good, wanting people to vote for them, wanting them to think that times are good. And also just the general excitement of the potential of change and progress, etc. That's interesting. Okay, now give me a few bullet points with dovish and hawkish rhetoric. Make them the most important points. All right, will this work? The dovish rhetoric. Here we go. This is pretty cool. This is pretty cool. I'll pull this up for you guys to just to look at it. This is kind of cool. This is maybe the best thing it's made so far. All the way at the bottom. How do I get rid of this? I don't want people to be looking at my ChatGPT Googles. Oh well. Promise don't tell anybody. Keep them secret. Dovish rhetoric. Emphasis on economic support. Advocates for maintaining accommodative monetary policies to support economic recovery, citing concerns about potential negative impact. Inflation as transitory. Expresses the view that current inflationary pressures are transitory. That's true, though. They said that, and they've continued to say that. Primarily driven by temporary factors. No need for aggressive tightening measures. Interesting. I like this. It also has done the dovish side, so we'll do that one too. Emphasis on employment. Prioritizes achieving maximum employment, indicating willingness to tolerate higher inflation for a temporary period to ensure labor markets recover. Cool. Data-dependent approach. Supports a more cautious approach, emphasizing the important... Yeah, that's boring. That's what they always say. Okay, hawkish rhetoric. Inflation concern stresses the urgency of addressing elevated inflation levels, arguing that proactive measures are necessary to prevent prolonged... That's very conflicting with what I just said. Normalization priority favors a more aggressive stance on policy normalization, suggesting that the current level... That's just a repeat. It's a repeat of this, just with normalization. Okay. Suggesting that current levels of accommodation might contribute to financial imbalances. Risks of delay highlights the potential risks of delaying. Yeah, these are actually not what I was hoping. Long-term inflation objective. The importance of their... Okay. You know what? That looked cool, but you didn't do that great of a job. But you did a great job in the rest of it, guy. Thank you, ChatGPT. Or should I say my official assistant, ChatGPT. ChatGPT. They're a great person. Thanks for sitting through that. What did you guys think? We wanted to try this a little bit differently. Vote in your polls. Vote the poll. What do you think? We're at 42% nothing burger. It's all perspective, right? It's all perspective. 20% bearish, 30% bullish or dovish, hawkish, dovish. Pretty split. Nothing burger is always the winner. Get your last few votes in here quick if you can. We got 590. Just smash them in. I'm going to start a new poll. What's up, Maggie? Gina PT. Hey, now you're talking my language. Ooh. We made it up to 860 people viewing. We didn't hit a K. I wasn't being very entertaining. Let's be real. I was reading a summary that was more informational than it was entertainable. I don't know. That's okay. I thought we'd just try something different, see how it worked out. I didn't hate it. It's a little dry. I wish I would have been able to... maybe next time I'll get help with the ChatGPT part, so I'm much more free to interact. But it would have been cool to read what you guys are saying while we go through the different pieces and your thoughts. Next time, have it read it in Gina's voice. M. Stone, you dirty dog. You're reading my mind, man. Reading my mind. That'd be brilliant. What I really should do, guys, is I should make... There's AI programs where I can take my voice, and then it can read in my voice. And then I can just outsource everything. I don't have to say another word for the rest of my life. That sounds like a great plan. Great plan. Nice voting in the poll there. I actually forgot what I was going to... Forgot what I was going to do as the next poll, but that's okay. Neil Weston says, you talks too much. What would you prefer I do here, Neil Weston? If I don't talk, it's very quiet. I can try American Sign Language. Bear, bull, I'm making this up. Please don't be offended out there. If you speak ASL, I am... just trying to troll a guy in the chat. That guy. Not a lot of price movement, a lot of spice. I marked out where these charts started. Let's go down to the 1 minute and get this giant dog hair off my microphone. No. Microphone's like a magnet for dog hair. I marked out where we started, and this has got to be one of the least volatile. Now, these are the minutes. The minutes are never as volatile as the meeting. Ever. But not a lot has changed. It was interesting that Bitcoin began dumping, and the dollar kind of did its first, like, real rally in a while, and that's on the 1 minute, so barely went anywhere. Zooming out, you can see not a lot of change here. Really range-bound stuff. Dollar sinking over the last day or two. Bitcoin remaining mostly sideways. Coming on back down. FTM, please. Tangents. Tangents. What's up, Andrewska? People might be reading still. What are they reading? I just read it all to them, baby. Rip CZ. You know, that is an interesting article. Let's pull that up. We're not a news place, but when we do the FOMC stuff, we get a lot more news type people here that are, they're not all just here for charts like usual. This is big news in the crypto world. I do want to begin this news, as I usually do, with some expectation tamperings. This isn't the end of the world. This sucks a little bit. I like CZ. You guys are welcome to hate CZ, but I like CZ. He's an OG. Like, he's a crypto OG. And most importantly, while this is likely real, as in it is a factual thing, it's not made up in that sense. This is just FUD. This has no impact on the actual crypto market. This is irrelevant. But what it is relevant to are those people out there who are already a little worried, a little scared, maybe even a little euphoric. Those people out there feeling emotions about the recent price action are going to be impacted by this. We did see a sell-off. We'll take a look at the Bitcoin chart for a little bit here in a second. But this is what we want, guys. It's not necessarily CZ or Binance. We want FUD. We want real, tangible, palpable. I want to be able to taste it. I want to wake up and go, nah, that's scary. What is that? That's what we need. We need it. I'm telling you. I won't go into it, but we need it. If price is going up, we need FUD. So here is the FUD. And again, this is actually real, to my knowledge. I believe CZ has stepped down from Binance. Let's give a 4 in chat. Can we get a 4 in chat? Usually we would do an F in chat, but we'll do a 4 in chat. Step down. And I actually don't know the intra workings of this. It's obviously or logically related. Ooh, tap for sound. Wow, that's a 4-minute video. They really came out with that fast. I bet that's AI generated. But logically, this is related to the SEC asking Binance for $4 billion. $4 billion with a B. Somebody go Google right now. What is the largest fine they've ever given out? And I want to bet I'd put one whole Dogecoin on it that they've never given out a $4 billion fine. You hear like Wells Fargo, like opening accounts for U.S. citizens, like without, not even like without their consent, but like clearly nefariously. And they're like, here's a $25 million fine, Wells Fargo. It's like, then Wells Fargo goes and makes like, I don't know, $250 million in like money laundering. They profit $250 million. And then the SEC is like, here's a $25 million fine. You can keep the other 220. Like it's silly. It's obviously, it's clown world. It's effing clown world. Meta $5 billion. Okay. There you go. I stand corrected. Did Meta pay it? And if they did, I also want to say, was it only after they renamed to Meta? Ooh, conspiracy. Let me see if that shows. I mean, I'm sure someone in the chat knows. Plans to step down and plead guilty. He's going to plead guilty? Wait a minute. Prosecutors also unsealed a document charging Binance, which CZ owns, with anti-money laundering and sanctions crimes. Binance also... See, here's where it gets confusing. Now, Binance will also plead guilty and agree to pay the fines. But didn't they just say he was pleading guilty? I think it's just Binance. I don't know. Is there a personal case? Does anybody know? Let me just see this quick. $4.3 billion. Zhao has agreed to pay a criminal fine. Okay, at $50 million. So CZ is paying what a bank usually pays. Binance is paying what you get when you're in crypto. May be reduced based on separate civil penalties. All right. The deal would allow CZ to remain majority owner of Binance. I think that's a good thing. But he won't be able to have an executive role. That's fine with me, but oh well. I think that's about it. CZ wasn't part of the club. True that. CZ isn't a crook. I agree. Guys, for all the people out there, there's people yelling CZ is great. There's people yelling CZ is terrible. Here's my story. Here's my hand to the spice god's truth of my opinions of CZ and Binance. When they came out, when they started trading in 2018, my first thought was, LOL, I'm not that dumb. I would never put my money on some random exchange I didn't know anything about. I was in China that, just can just run away with my money and I would have no recourse. Yeah, right. That's a scam, right? So I didn't use them right away. Everyone else started using them. It got really popular. The advent of Tether in trading in crypto was a huge part of that, I believe, as well, and the timing. And I don't know how long it took. At this point, the timeline's gone. But at some point, I was like, oh, wait. I'm wrong. This is a fine exchange. This is safe. Since then, Binance has had so few. I mean, there has been issues, of course, but so few issues compared to what I initially expected and thought of them. They have proven themselves in this space. They're a fine exchange. They're fine. I mean, we can't really use them in the US. They're very geofenced, very KYC'd. But they, in the beginning, likely all of these things that people will come out, and I have no insider information, but all the things that people will say, oh, they did all these bad things. I don't doubt that they did a bunch of bad things in the beginning. I have no proof that they did. I'm not accusing them, but no doubt. But they have lasted here in crypto. Anything that lasts here in crypto, it only lasts because it doesn't have a crack in the dam. There is no lucky over, it's only been, it's 2008, almost 6 years. I would say it's 5 years and change. If they had been doing something that could have sunk them, it would have sunk them. I believe, like many things, they likely did things that could have sunk them in the beginning. They managed to float long enough, and eventually they had the resources to go, we better fix this motherfucking hole because we got a lot of money on this boat, and there's no reason we need to be cheap about it. At this point, in this place and time, they survived all of 2022. All of those cascading liquidations, all of those insolvency problems. I don't think I'm sure you could get them on something, but I don't think they're the bad guy. FTX was the bad guy, and this seems like they're just running us around, doesn't it? This is really emboldened for me because then, I think last night, they threw a suit at Kraken. You don't come after Kraken, boy. Kraken's been around, 13 years, 14 years in crypto? That's one of the tightest ships that exist. That's it. I don't know. CZ needs to make room for the new BlackRock delegated CZ. ZC? Ooh, that'd be a funny Twitter account. ZC, the BlackRock CZ. Defend Kraken. I agree. Guys, not financial advice. Every exchange has risk, right? If you have assets on the exchange, they are a liability to that exchange. They are a risk. You have risk of losing them. Don't ever be fooled. But I have lots of money on Kraken. I have used Kraken almost as a bank account for 3 or 4 years. Not my only one, but I've kept a large amount of dollars, Tether, coins, whatever on there for years. I saw this news. I have not moved a penny off Kraken. Should I? Yeah, I should hedge my bets. And I should probably split out what I have there, move it some to Coinbase, whatever else I trust. I'm more into cold storage, but I haven't moved a penny on that. I'm not worried about Kraken. I will defend Kraken with these hands right here. Scallywags. Fed update at what time? Man, gee, just go back to the beginning of the episode. It was the first 25 minutes. It was the first 25 minutes of this. Oh, Josh. Josh, you tipped $20, my man. Thank you for the super chat. For EGLD, Josh, I'm not really doing charts right now, if you didn't notice. I love you, though, and I appreciate you. I'll pull up EGLD. I'll pull up the chart so that you don't feel totally bagged. But, like, we're not... I think you missed the vibe so far. EGLD just following the noodle. If you'd like to see more on EGLD, jump in the Discord. I'll put this in the Discord. Josh will be in the Discord, and he will be there to likely yell at you about EGLD. Something to look forward to. You used Binance, it was fine for you. Oh, yeah. So I was talking about Binance originally, guys. $4 billion is not great for Binance to lose. Not a great thing. However, Binance, I don't know what their revenues are, which I should probably have an idea. And I know it's probably not very hard to find. In 2022, $12 billion. Binance. Not Binance US. If Binance US raked in $400 million in profit, what? Okay, in 2020, Binance had a reported profit of $800 to $1 billion. Needless to say, they doubled, tripled, quadrupled, or more that in 23, and no doubt 22. $4 billion is certainly not an amount of money they want to lose. It definitely will hurt their business, but I don't think they have to pay that like up front, like all at once. If they're making $1 billion in profit in 2020, they can handle it. This isn't gonna tank Binance. Like, this isn't gonna be the end of Binance. It's not good for Binance, but it's not the end. And it's also, the exchange isn't shutting down, at least any of what I've read. It doesn't seem to have anything to do with that. It seems that the SEC really just wants their piece of that pie. That's it. That's it. They just want their pie. They want their cake. And they see somebody with a lot of cake. And they say, how much can we get? That's it. Don't underestimate Binance reserves and Tether. I would never underestimate Tether. I was talking about kind of going through time in crypto as a company or platform or anything, and making it through the years. You make it through because you're doing it right, or you've done it wrong long enough that you've had the resources and time to make it right, and now you're doing it right. Tether is the ultimate example. It is the ultimate comparison to Binance. I had the exact same feeling about USDT. Didn't like it. Wouldn't touch it. I was wrong. Now, again, just like Binance, I'm not going to put all my money into Tether. I'm not going to put all my money on Binance. But as a tool, they're both great tools. I wouldn't hold Tether. That's stupid. I mean, like, why would you do it? It's not going to appreciate. There were people that were really confused back in like 2018, 2019 about Tether, and they genuinely thought Tether would go to like $2 or $4. And I just didn't know what to say to them. But Tether, I would bet in a no gloves cage match, Tether versus any company or bank in the world, I bet Tether would win. They have too much money not to. They have too much incentive to do it right. They have $12 billion in Tether. Yeah, just make it rain. Still, losing $4 billion is not fun. It's not fun and not good, and it doesn't benefit them. Definitely puts them back. Definitely. That was some nothing burger price action. It looked like it was going to get spicy, and then it just didn't. Let's just really quick look at Bitcoin here. For my own good. What was this line from? I don't even remember anymore. That's from that's when the FOMC, the minute started. Not really relevant. Price didn't do anything. Weekly range, trading below. Weekly high, still trading above. Let's move that down to the monthly low. Monthly open. Easy peasy TA, man. Here we go. Not the best close to not the best price action. Today's low down to 36.2. Opened up here. Interesting. Is this what do my eyes deceive me? Or is the weekly, yeah. Or is the weekly open? We're going to make the weeklies blue for no reason. I'm color coding my chart here because we have our next in the series of long form videos coming out. We're going to probably do a patron only viewing of it first, but it will be published soon this week, I'd say, about support and resistance and chart hygiene and all the goodies. Nothing for sale in that video, just pure education. All right. And color coding your charts is in there. It's interesting. Weekly and daily, right at the same level. That definitely draws my eye to this price. Right here, 37,472 at the daily open today. We have yesterday's open, or bearish engulfing line, within a margin of error, 2.2% below. This is going to be the resistance of today. If we don't fill this in today, which maybe we won't, I don't know. If we don't fill this back in today, tomorrow's candle, even if we're going down more, likely to fill that range. But what's interesting is we have that daily order block overlapping with our weekly open. That's a pretty clean chart. That's a pretty clean chart. But I'm liking these bottom wicks. Let me go down to this low time frame. We're not going to do too much TA today. Probably going to stream again tomorrow. I thought tomorrow was Thanksgiving, so I was like, we're not going to stream tomorrow. Derp da derp da derp. No, it's not. That's Thursday. Interesting. Down here on the 5-minute time frame, that's looking pretty bearish. Inverted. Wick lower high. That's looking pretty janky. Luckily, it's inverted. You already retraced. I don't know if I'm going to get much more from this time frame now. 1 minute trending up, or 1 minute rolling over, 5 minute trending up. 15 almost rolling over. Man, this is such tight price action. I don't even want to speculate on it. Our trades from yesterday, some won, some lost. We got wrecked on one of them. These wicks, man. Very wicky. We did go over the possibility yesterday. You said, well, we're up here. I think we're going to go higher, right? I still think that that's right, even though we obviously went lower. This was looking really good, and I said, in reality, we have a lot of room to the downside where we're still doing this same thing, right? I guess in theory, you could come all the way down here. I think that would wreck it, though. I don't think that would really hold the pattern. But you still have higher lows. I don't love that this was taken out. I was looking more for 37 bounce. You're still having higher lows, though, and you still have relatively flat top. Nothing has changed for me. Right here, this is when, I bet if you look for when this Binance stuff came out, it was right here, right before the dump, or it was right here at the bottom of the dump, and that would be driving that home as FUD for me. That would be very fuddy. I don't really have a good read here, just based on my general upside biased on this pattern. I don't know how to fit it. I say this and then this could get ugly right here. I just noticed this trend line is likely that high. Yep. Could get ugly. I don't love that trend line broke and that we had a wick high to it. I don't love that. It's pretty ugly. But just based on the general bullishness of what I see playing here, obviously until this down here is broken, I think it's likely that we do come back to this daily box. It's unfortunate that we already tested that daily earlier. It's unfortunate. I would have much more confidence that we're going to go there today if we hadn't. What if today closes green? Actually, today closes green. It could be a wild, wild shakeout. We only need 37. We only need 37.5. Price is currently 37 flat, basically. $500 is 1.5%. Green close today would get very silly. Be very, very bullish. I don't know if I'm going to bet on that, though. All right. I don't like this. I'm hesitant. I'm hesitant to make a call. I'm still leaning bullish, as always. We're still high above where I said that I'd get bearish. All right, 200 weeks down there. I think a lot of things sold off. Let's just flip through. The meme entry was doing so good. This sell-off kind of put a little dip in it. Still in territory. AMP that we looked at yesterday is looking fresh for 002. Ethereum. I'm the greatest trader alive. No, I'm not. I like saying that. Swish. Just swish on Ethereum. Look at that wick fill, baby. Smash the like button for that wick fill. For that free money shadow money wizard gang. Wait, I gotta clear my voice. Nope, can't do it. My voice refuses. Shadow money wizard gang. We love casting spells. There we go. That was good enough. Swish. I'm not even gonna go into it. Sol stopped out. Riggedy wrecked. Didn't like that position. Looking for 48.50. Vet. Looked at it yesterday. Looking for 1.93 cents. Could call it like 2 cents, but been waiting for that for a while. XRP being XRP, almost stopping out this long. Whoo. Ooh, is it really coming back to like 56? I don't know. It looks like it. Tau. Oh, I hate saying told you so, but no, I'm just kidding. I didn't tell you so. Tau, hit that measured move. Hit our extension all the way out. Our 2 measured move, or our 1618, not quite the 2. That's up at 548. Pulling back, you might see 195. Either way, I refuse to take a position on this after the shenanigans that we found on the Patron night. But yeah, we'll talk about that another time. ARB looks like it just filled. I mean, we already filled and closed this long, but it is back to that. I don't like the way it's going. I do think, though, that there's a possibility to play the exact same trade. I've seen that happen a good bit lately. It's actually a little bit, there we go. You know, we already hit that trade. It makes more sense to move down. There you go. ARB doing ARB things. FTM wrecked. One long wrecked. That long's probably wrecked too. Yeah, it's wrecked. However, the patient, the good one, still waiting 27.2 cents on FTM. It's looking pretty good. You did break your low here. I'd probably be watching for something like this. Oh, yeah, we already looked at that yesterday. Stocks haven't moved. Dollar sinking, but like we discussed and talked about, very possible. Very possible before moving lower. Caspa, I was wrong. I was right. I was wrong. I was right. We'll find out. If you missed the last 2 streams, you won't know what I'm talking about. But at the moment, I'm right again. So we'll find out. Tia, if you guys have noticed, every time I place a trade that's anywhere near market, it gets wrecked. Just a little pro tip there. We've been doing that lesson. Yeah. We placed this one, I believe, on Friday. No, on Friday. Monday. Back here. Very sketchy. Very sketchy at best. Almost stopped out. Weirdly, Gala, though, seems to be working. Gala fills good. Looking for 3.6 cents. PYR, yeah. YFI, yuck. Look at this, man. Even though we were patient, it was at 15, 16K. Even though we waited for a 34% pullback, it still just kept dumping. Now at 7,800, this is the only spot I'd be looking. I wouldn't touch this, though. That is a bad sign. Not much there. Dot, painting a flag, and then shitting to bed. Okay. Maybe coming on down for $3.35 finally. Get rid of some of these old ones. Wouldn't count it out. Wouldn't count it out. This was the bearish fractal. That didn't play out. Didn't play out. Fingers crossed. Yeah. Let me see who's here. Who showed up? I love you guys. What's up, Air2369B Baker? Cody Codes just left, but he was here. Car for Coin Card. Crypto Sharknado. All you guys' names starting with C's gets me all mixed up. Crypto Steve O. How you doing, brother? Expanding Soon. Foxy Thorny Home. James Max Jason M. John Doe. Japernicus. Jordan. Justin Rudy. Jay-Z. Get a 4 in chat for a CZ. Janice Pilianus. Something like that. Lost Profit. M. Stone, my man. Making money online. PC offline. PC offline crypto cloud mining. That is a jargon of a sentence, my friend, but you're welcome here. He left. MC Prosperity. Mad Cow 13. Kang the Conqueror. Marin Medhane. Meanless. MC Prosperity. Moggy Games. My queen. What's up, Mr. Luxana, Nicholas Arena, Panna Man, Pwned for Bull, Randy Abigot. Randy, you should DM me how to say your name. I always feel like I'm saying it wrong. Reddy Taylor, Rich Maxwell, Rigo, Stix96, Sin the Pickle, Tiago, Tillin McPooch, Von D. Hayes, Vincent Vega, Vishal Kumar Wick, Zigzag Zombie Fish, Zelico, Goose Streak and Monkey, and probably many I missed. I love you guys. Hope you all have really great Thanksgiving plans. You don't have to celebrate Thanksgiving. You just have to celebrate friendship and community. And you should do that in our Discord. Please tell data of FOMC, positives or negatives. We did that hardcore. It's at the start of the stream. What up, dudes? What's up, dudes and dudettes? Dudes and dudettes. Pwnedable. Oh, like a panda, maybe, or pwned like owned. Your charts look great, TOM. Thank you, Expanding Soon. Home, Doge. Thoughts on Casper? Jason Casper. How do I chart a new coin? Steve-O, the answer is you can't. The answer is you can try. You can try, but you can't. You just have nothing to work on. You can only, it's not for the faint of heart. Anyway, guys. Anyway, we'll be live again tomorrow. We have a long form video coming out. Check out the Patreon. Invest in yourself. Sign up for Patreon today. Exclusive educational content. Small group Q&A. Trading lessons. I don't want to say trading setups, but we share more setups there. All the goodies. There's still a few memberships available at the discounted price. Make sure you've joined the Discord. Sign up with Femex, our exchange sponsor. They are the best. Sign up with them. Make sure you've liked and subscribed, and we'll be live again tomorrow. Woo! Thanks everybody for subscribing. Crown.